I believe that gold is the leader and gold wants to go higher. But it's not, there's a possibility that gold, barely corrects, that gold basically decouples and goes higher just because that's where it wants to go. I mean, that's a possibility, but I give that only about a 20% chance. I'm more in the 80% chance that gold is going to go down 5 to 8%. So if gold goes down 5 to 8%, the miners will go down 10 to 20, depending on the miner. But I think you can expect most of the miners to go down 10%. But right. for me, that's not a reason to hedge. A 10% correction is a nothing burger in miners. Yeah. It's a nothing burger. We get 10% corrections in weeks all the time. But 20% will be a little painful.
Analysts at Quant Mutual Fund are sounding the alarm, warning that gold may have already peaked out. They foresee a 12 to 15% correction over the coming 2 months, cautioning investors to adjust their positions accordingly. Gold still appears strong, but there's about an 80% chance it will experience a short-term correction. Many seasoned investors are comfortable with 10% corrections in gold miners, viewing them as normal fluctuations rather than triggers for panic. However, if full 12 to 15% pullbacks materialize, it could signal deeper temporary trouble and warrant closer attention or defensive positioning. Durrett is a longtime precious metals investor, author and founder of goldstockdata.com. He explains that during the sharp market routes earlier this year, gold fell sharply, dropping over 3% as investors liquidated positions to meet margin calls amid broader declines in the equity market. This underscores the risk. If the stock market crashes again, history suggests gold may not buck the trend, potentially declining 5 to 8%. On the bullish side, Durrett mentions analysts like Michael Oliver, known for momentum-based structural analysis, argue that both silver, and by extension gold, are building strong upward trends that could continue without meaningful corrections. These perspectives posit that precious metals may benefit from solid technical momentum even amid volatility. Despite short-term risks, the long-term breakout candle in early 2024 convinced some that gold is heading toward $5,000, a view held with firm conviction since then. Gold has steadily climbed since that breakout, but miners have not yet wholly joined the move. The real trigger for miners will likely come from silver. Thanks to booming usage in renewables, AI, and electronics, silver prices have surged over 33% year-to-date, outpacing gold, with supply deficits fueling momentum. A breakout above $30 catalyzed significant rallying in 2024, and observers expect silver to continue upward toward $50 sometime in 2025. As we present clips from the video, please like this video, subscribe to our channel, and turn on the notification bell to stay instantly notified every time we upload a new video. Thanks for the support and enjoy the video.
Now we can pivot a little bit to gold and the miners. So I say no. Now, Michael Oliver, he thinks that gold is probably not going to correct at all, which I'm like, I'm not in that camp at all. He thinks that gold and silver are trending higher right now. Will keep trending higher. Don't worry, But I'm more in the worry camp in that when the stock market does crash, which I think it could happen any moment, we're kind of in that any moment time frame. When it does crash, I expect gold to go down at least 5%. So I'm in the 5 to 8% camp. Now there's a possibility. The odds, if you look historically, especially 2008, 2007. The stock market, right? Okay, when the stock market crashed in 2007-8, gold and silver initially crashed with it, and that's really our correlation, because this is the same thing. We're going to be crashing into a recession. They both crashed at the same time, and this is probably the best correlation, because that's exactly what's happening. That was a crash into a recession, and we're going to crash into a recession again. However, I believe that because of all the reasons I talked about, I believe that gold is the leader and gold wants to go higher. But it's not, there's a possibility that gold, barely corrects, that gold basically decouples and goes higher just because that's where it wants to go. I mean, that's a possibility, but I give that only about a 20% chance. I'm more in the 80% chance that gold is going to go down 5 to 8%. So if gold goes down 5 to 8%, the miners will go down 10 to 20, depending on the miner. But I think you can expect most of the miners to go down 10%. But right. for me, that's not a reason to hedge. A 10% correction is a nothing burger in miners.
Yeah,
it's a nothing burger. We get 10% corrections in weeks all the time. Now I want you to bring your gold chart back. So I haven't turned uber bullish on the miners yet, but I turned uber bullish. I want you to go to February of 24. So February 24. So right there, you can see we were flatlined in 23. Right? We were flatline. We were basing. See that? There we go. Yep. And then in 24 in February, we basically we had this green candle, February 24. Yep. Right. So yeah. I thought it was green. Okay. So it's the next candle. Go to the next candle. So, okay, there it is. That's February. So this is the weekly. All right. So this is the candle, February 20th. So it was the end of the month. We had 7 green candles in a row, and we had one red, but basically that was the breakout from 2,000 to 2,400. Once that happened, so in April, right there, April, I think you can back off. Go back off 2 candles. One more, right? Yeah, right there. So that candle right there, that was the candle that I went bullish on gold. And basically, when I mean I went bullish, I went uber bullish, and I basically said, that's it. Gold has broken out. Gold is going to 5,000. That candle right there told me gold's going to 5,000. I have not turned I've been uber bullish since that candle hit, but we haven't seen it. And if you look now, okay, now Danny, show them the whole chart since then. So that was a 2,000 hour, 2,000. Now look what the gold's done since. All it's done is go up, 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 which is so. Now the reason why I was able to do that is because I've been following this market for 20 years, and so I pretty much knew that's it. That's the breakout candle there. We're gone. We're off to the races, people. But here we've had this big move in gold, and guess what? The miners, they really haven't played along. What we haven't seen yet is silver do that 7 candle run that the gold miners did. Now that's going to happen as soon as silver gets above $30. So when silver gets above 40, the miners are going to have 4, 5, 6, 7 weeks in a row where they go up. And that's going to be your silver breakout that's analogous to the February or the March, April breakout of gold. And when that happens, that is your signal and your beginning of your gold silver miner breakout. That's where it's going to go to 1,500 to 2,000. And we're going to ride this thing for 2 years. And so what I'm waiting for it's all about silver. We got to get silver above 40. Until that happens, this HUI here, this little breakout in the HUI, in many respects, you can kind of ignore it.
In July 2025, the U.S. imposed sweeping tariffs up to 25% on imports from Japan and South Korea, and threatened additional levies against BRICS-aligned nations. These moves had a global impact, sparking diplomatic backlash and notably dampening markets abroad. Meanwhile, BRICS leaders condemned these unilateral tariffs, labeling them trade-distorting and harmful to global economic stability. Experts now see Trump's aggressive trade posture inadvertently driving emerging economies closer together. The unity among BRICS, bolstered by shared resistance to U.S. pressures, has accelerated cooperation around trade and currency alternatives. While not yet formalized, there's growing speculation that if BRICS offers preferential trade terms, like lower tariffs or strategic partnerships, Asian economies suffering from U.S. tariffs may begin to pivot. Japan and South Korea, which are heavily reliant on exports, are under pressure to diversify their economies. Analysts caution that if BRICS values and trade incentives align compellingly, joining or deepening engagement is not out of the question. Let's reflect on the interview.
The one thing that's probably going to happen is Japan's probably now going to join the BRICS. They're like,
really?
Yeah, absolutely. Japan. They're like, if the BRICS give them a deal, if the BRICS say, you join us, you get a special rate on exports, they'll join them. They get an advantage versus a disadvantage if the BRICS basically say, look, if you're one of our members, then you get a 2% discount or something to that degree. If you're not one of our members, you pay a 2.5% tariff, something to that extent. And that's probably what's going to happen. I mean, you got to give people an advantage for being a member at a certain point, right? You're a member and they're not a member. There's going to be some differences. And so, yeah, Japan's going to probably join the BRICS now. Like the U.S., they just rug pulled us. Screw that. We're going to join the BRICS. Especially, you got the China joining the BRICS, especially if like Korea joins the BRICS. Right now it's like Korea and Japan are like the only two people outside, right?
And then you could potentially see normalization between North and South.
Yeah, something to that extent. But bottom line is this, is that those tariffs are in many ways a wedge for us in the BRICS, where the BRICS basically start growing and become more cohesive, if you will. The other thing that is, so the BRICS and the tariffs are highly related, in my opinion, because if you trade between BRICS, you don't have tariffs, right? They have basically a free trading agreement. So it's much better. Let's trade between ourselves. We don't want to trade with America. They have those tariffs on, right? So tariffs in the BRICS it's like manna from heaven for like Putin and Xi for the BRICS, these tariffs. It's like, oh, this is beautiful. Now we can expand our economic zone, our economic group. The U.S. is basically helping us, right? So you got that going on. Okay, the next one, I mean, so all these data points, they don't talk about on TV. They don't talk, when they have all these analysts on, they never talk about any of this stuff. Okay, here's a big one they never talk about: fiscal dominance, right? Fiscal dominance, we didn't even hear that term until 2020. And now it's a real thing. Now, what is fiscal dominance? Fiscal dominance is the U.S. economy needing government spending to grow. Without government spending, you basically get negative GDP. So you can't cut government spending because it is literally the engine of the economy. And in July, we spent more money in July than I think we spent during COVID. It was like some crazy number, like $670 billion in one quarter. It was $7 trillion, over $7 trillion on an annualized basis for government spending. Now GDP includes government spending, which is a joke. It shouldn't. I mean, no way would I include 100% of government spending, just call that all GDP. It's BS. It's a miss. So the economy we have a Potemkin economy that's basically riding on air. It's fake. It's all based on debt. It's all based on liquidity. It's all based on government spending. But, well, guess what? You can only do that so long before you have a problem. Now, this problem has been building, and the problem has been, this fiscal dominance problem has been building to where foreigners are going, wait a minute, the U.S. has $37 trillion in debt. They got a problem. How in the hell are they going to pay that back? Well, they're not. But don't worry, they're not going to pay it back, but they'll pay you your interest. You'll get it. Don't worry. When some people are going, maybe not. I'm going to stop buying those bonds, and I'm going to sell my own.
The markets for gold and silver are still at a crucial juncture. Although some analysts predict short-term corrections, others believe that prices will continue to rise, particularly if silver's breakout continues. However, U.S. tariff measures run the risk of altering the nature of international commerce and possibly drawing BRICS closer to long-standing allies, such as South Korea and Japan. These patterns draw attention to the vulnerability and potential of the current dynamic financial environment. Will the industrial demand for silver be sufficient to sustain miners if gold experiences a correction of 12 to 15%? Could a long-term realignment, where important allies prioritize trade relations with BRICS over those with Washington, be accelerated by U.S. tariffs? Please share your opinions by leaving a comment below and participating in the discussion. If this video was helpful to you, please subscribe and like it for future updates. We appreciate your support of our channel and the time you take to view it.